Morning, everybody. Good afternoon, good evening, wherever you're at, whatever time zone you're in. Thank you for coming back, tuning in, or subscribing. So today, this is our investment Saturdays for a while. So we're going to talk about when buying a home does not pay. Just so you know, I'm not the expert. I get all my resources from Harvard Business Review, Money Magazine, or Kiplinger's. So this is what we're going to talk about today, and I'm going off the screen. All right, this shouldn't be too long of one. All right, so when buying a home doesn't pay? If anybody has any comments below, be sure and let me know. Okay, so I'm just going to read a couple of things. I eventually ended up moving into a house the same rate as my rent. However, right now, as I watch my friends going through the home buying process, which is definitely not normal, right here and this is 2022, so I don't know when y'all are going to be watching this. This could be out for 10 years from now, but in 2022, in June of 2022, the market is like insane. So anybody that's going through the home buying process wonders if they're throwing their money away. But everybody knows they're not, because of the equity. The ones that have already bought are making out like awesome because of the equity. But those who never had a home before and are buying, they're buying up. They're buying over a price. So they're wondering, is it worth it? I don't know. Personal finance experts have held that home ownership is a key step to building wealth. A home is an asset, and usually it appreciates over time. And in the last 6 months, in 2021, actually, the whole year has been doubling. So whoever had a home in there doubled. You can borrow up to 80% of the value of your home in a loan, but we're not going to emphasize that on this channel because we're trying not to borrow. The key to getting wealth is not to keep borrowing or have consumer debt. Before individuals have access to low-cost mutual funds and brokerage accounts, the stock and bond markets were limited to institutional and deep-pocket investors. For everyone else, buying a home was the primary way to invest. So let me see here what we're going on. The index analyzes 23 U.S. metropolitan areas to determine whether market conditions, and I'm getting this information out of Money Magazine right now. The U.S. metropolitan area determine whether market conditions favor renting or buying in terms of wealth accumulation. In the recent update, the index concludes that 17 out of 23 metropolitan areas, including Atlanta, Los Angeles, and surprisingly Detroit, consumers would be better off renting and investing the money they have used for a down payment. That is a surprise, but nobody can probably afford Los Angeles. So the money they would have used for a down payment, closing costs, and other expenses, even though rents have skyrocketed, the median home sale price in the U.S. hit about $429 in late April of 2022. And the 30 fixed mortgage rates recently rose to 5.27, the highest since 2009. So the past 10 years of a bull market return, the S&P 500 index has increased 11.7 on an annualized basis, compared with a 7.9 annual raise in home values. So it's probably better to do stocks, right? I'm just looking here. Renting strategically. For renting to deliver a higher return, you need to have enough money left after your monthly rent to invest. And that comes down to personal choices, which is what we emphasize a lot in this channel. Personal choices are to stay on a budget, to look for ways to save money, which we have videos out sometimes every week, every other week, on how to do this, to give you ideas. For example, if you'd be happy with a 1-bedroom unit, pick that over a 2-bedroom unit, which is a little pricier. Or skip the complex with all the pool and the gym, and what else do we have? Golf clubs, golf courses. All those things start adding up, and they'll charge you more in your apartment. Now, I don't know about the washer and dryer, but I always like having a washer and dryer in the house. I don't know how much more it is having a washer and dryer in the house or your apartment than not, but I thought that was always nice. So if you live in an expensive metro area, like I do, I live in between D.C., Washington, D.C., and Baltimore. So we got two. One is definitely higher than the other, but two cities. So you want to save money by living outside of the city. Even with the rent increasing $50 a month, it's still cheaper than closer apartments living near the D.C. area. So you can get it cheaper if you go get rid of all the amenities that we were talking about already. So you have to just find what you can live with for a while and sacrifice, which is what I'm doing right now myself, because I'm getting money put in the bank and saving up for. I'm not renting, I am owning, but I'm owning in an area that is a lot cheaper than a nicer area. If that makes sense. I don't know, but I'm doing that so that we can get some money in the bank. It's not a classy neighborhood is what I'm trying to say. It's like Section 8 people, a lot of renters here, a lot of people that they're not low class. They're definitely not low class people, but it's a mix of middle class and poverty. Some people are on Section 8 housing, which means they need help from the government to subsidize their incomes. If you didn't know what that meant for all you people that are international watching me right now. Section 8 means the government is subsidizing some of their money for them to live. So I live around all that kind in this neighborhood, which, I probably can afford more, but right now I'm trying to get money in the bank to put money down on a home. So for me right now, buying a home does not pay because the interest rate is 5.29% or 5.27%. And it's a crazy market in 2022. 2021 and 2022 are both crazy because people are like fighting over houses. So for me, and for maybe some of you, you have to decide whether renting is better or maybe even going to a lower income neighborhood and getting a home. If you can, not where there's super high crime, because there's crime everywhere, but you just have to decide how much you can tolerate. I mean, if they're shooting each other outside your bedroom door, then that might not be advisable. You might want to go rent and in the middle, where it's not super high but not super low. So you just have to decide whether it's not. Over the past 10 years, the S&P index has increased 11.7 on an annual basis compared with a 7.9 annual rise in home values. So if you look at that, you might be better off investing in the S&P than a home right now. And you might want to get with a financial advisor if you're having trouble deciding if it's right for you or not, and they can break it down for you even more. In addition to trading off like some of the amenities, renters need to get in the habit of saving, which we talk about a lot on this channel. It is very difficult because we have the FOMO going on, and also people are going crazy with the flying right now because I do Uber and I can see it. They want to travel, and all these traveling things are going to start adding up over a while. Everybody's getting back into the entertainment, the restaurant, eating, which is fine. And do you realize how much money you saved during the pandemic when you didn't do all those things? So it does require some discipline, and also you have to keep your goals in front of you if you want a home. And we're just waiting for the interest rates to go back down. We're waiting for the market to calm down and then go in and buy. So you got to keep these goals. This channel will definitely help you because I do get on here and preach every now and then, and tell you that you need to keep your goals in front of you so that you can stay focused and get out of debt. For me personally, it saved a lot of money working at home because I don't have to go out and spend all this money on clothes. So hopefully that will continue to where I can work at home, because that saves me a lot of money. I don't know what it is with clothes. I guess we all have our things we want to spend money on, right? So this is how you do it. This is one of the wealth building goals, investing. And normally I would tell you to invest in a house, but sometimes it doesn't pay to invest in a house. And right now might be one of those times. So if you need a financial planner, you let me know. You can contact me on my website. This is not sponsored, by the way. I'm just trying to help you stay motivated and keep your goals on focus. If you are working on getting a home and it looks a little crazy right now, stay focused. Everything will change in time, and the time will be right for you. So don't start spending money sporadically. Keep putting it away. Keep saving it. And the time will be right when it will be time to get ready to buy again. I thank you all. Please come back again.